Welcome back, all my fellow traders. In today's video, we are going to jump into understanding the previous day high, low, and close. I'm going to provide you with a fantastic strategy that you can use every single day. I'm going to break it down for you. I'm going to make it very, very simple how you can incorporate the previous days open, high, close, and low every single day to start executing some trades. But as always, before we jump into the video and I give you that knowledge, do me a massive, massive favor. Hit that like and subscribe button right now. It really helps me, it helps the channel, and it helps the community as well. So many of you are watching this video right now without hitting that subscribe button. Do me a favor and give that a subscribe. Let's get into the video. The first step always is to remind yourself what the market does. The market will always do one of three things, okay? It will either be in a bullish trend like this, it will be in an area of consolidation or range like this, which can be accumulation or distribution, or it will be in a sell or a bearish trend like this. All right, and there's loads of different ways of identifying what kind of trend you're in. You can keep it very, very simple and use a trend line. All right, so for a bullish trend, we would be supporting price action up. For a bearish trend, we would be supporting price action to the downside, and for consolidation we would be in a horizontal range. The other way of identifying it is very simple. In a bullish trend, we are making a series of higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. In a bearish trend, we are making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on. And in a range, we will be making a mixture of lower lows, equal lows, higher highs, equal highs, equal lows, and so forth. You will just be in a range where there is no consistent trend. All right, so the market will always be doing one of these three things in various time frames, and it's really important that you understand that when you come to the market each day. Analyze the trend on the higher time frame. Ask yourself, are we in a bullish trend? Are we in a bearish trend? Or are we in a period of consolidation? Once you've identified what trend you are in a higher time frame, especially on a daily when you're coming to the chart, you might then be able to form a bias in a directional move. So if you're in a strong bull trend, you can think about possible continuation. If you're extremely extended, you can notify yourself that there's potential for a pullback. Or if you're in a period of consolidation, you can be thinking about further range rotation or the possibility of breakouts or failed breakouts, something we're going to go over later in the video. Now that you've established the trend, you need to look at the previous day's action. So before we do that, let's just remind ourselves what candle structure actually means, because a lot of people forget this very, very regularly. So here we have a bullish candle and a bearish candle, okay? And we have the high, the close, the open, and the low on this bullish candle. Remember, in a bullish candle, we open at the low. The lower wick will represent the low of the candle. The higher wick will represent the high of the candle, and the upper close of the body is, of course, the close of that candle. And the opposite is always true of a bearish candle. We will always open at the high. This is our high, all right? We put in a low at the lower wick and we close at the lower end of the body, all right? And it's really important to remember this because people forget that this basic structure is providing you with S&R. Because if we open down here and we extend all the way up here, at this point up here, buyers fail to push price further, all right? So then we pull back to this area. So the lower end of this candle, this bullish candle, we know we have support structure. We know buyers participated in bidding the market up. And we know up here, they got exhausted. They were unable to bid the market up any further. So at this point, we have some resistance levels. And the opposite is true of bearish candles, okay? If we open up here and we extend, we know that sellers came in. Buyers failed to participate in pushing the market any higher, and we sold downwards. All right. And from this area here, either the sellers were covering or the buyers were starting to bid the market up, and we closed right here. All right. So this is support down here. How can we look at this and take this information and make some key levels out of this? The way we do that is by zooming into lower time frames and understanding the candle structure and price action within that higher time frame candle. What do I mean? I'm going to show you right now. So here we have exactly the same, okay? These are the exact same candles as I showed you in the previous part of the video. We have a bullish candle and a bearish candle, okay? And this right here, these blue lines, these represent what lower time frame price action might look like inside of these candles. This is exactly what I'm talking about when I'm talking about where buyers stepped in, where is support, where is resistance, who is participating where. These are the questions you need to always be asking yourself. So remember the last two candles I showed you. These candles are exactly the same, except this time we're going to look at price action within them. Now remember, for this video, we're talking about this candle here being a daily candle, which means we would be going down to an H4 or an H1 or an M15, multiple time frames down from that candle to analyze price action within this candle. This principle I'm teaching you now is true of any time frame at all. So this could be an M15 candle, and this price action here could be an M1, for example. But let's stick with the video. This is our daily candle, and I'm going to assume this is an hourly chart down here. As we know, we have an open, a low, a high, and a close. So what happened to structure within this daily candle on an hour? We had a push down, another push down, and then buyers stepped in. At this point here, all right, we had a change of character or a market structure shift, whatever you want to call it. This is the point where we no longer made lower lows and lower highs. We broke out and we made our first higher high and our first higher low. This trend change is then confirmed by this moment right here. This moment here is our break of structure, okay? Trend is confirmed not on the change of character, but on the break of structure. And from this point, we get a bullish move up before a pullback, an extension out, and a further pullback. And this is where price closed. So for now, we can assume that this up here is an area of resistance. And until we break this, until we have a break of structure, we know this is an area of resistance. If we now look at the bearish candle, all right, very, very similar. We have that move up from the open, a further move up, and some exhaustion. We have this change of character. Remember, this change of character happens when we take out this pivot. Normal structure continues. We test that pivot, we test supply, we test resistance, however you want to frame it in your mind after the change of character. We get a further break of structure right here when we make a new lower low. And once we have that break of structure, we get that bearish trend continuation, okay, until we get a pullback, a further break of structure through this pivot, trend continuation of the H1, and then we pull back to this close. All right, so hopefully this is making sense to you, because it's really important for you to analyze what is happening within these daily candles, because it's this information which will help you understand levels that you might want to trade from. Remember, you always want to be trading with the trend, with the higher time frame trend where possible, and definitely with the trend that you are seeing on your chart. Don't be the person trying to pick tops and bottoms, okay? If you were trying to pick the bottom here and the bottom here, you were probably exhausted when all you had to do was join the trend. And the same here. If you were trying to pick this top, you got run out. If you were trying to pick this top and add, maybe you blew up. But if you waited for the change of character, for the market structure shift, for the trend continuation, and you took this short in here, you had very limited risk, you had overhead supply, and you took the trend continuation. Really important to understand that, because it's going to help you when you come to the chart each day and you start analyze price action, working out where we might want to go next, or even better, where you want to trade from for your trade plan. In case the last part of the video didn't sink in, let's go over some more examples of price action. So remember, this candle here is a higher time frame. In this video, we are talking about a daily. So right here, you can see we have a long lower wick. What does that represent? That means buyers were extremely strong because this is the moment where this candle opened on the daily. We pushed down and we failed to expand. Buyers came in and they took us above the previous open and we closed at the highs. So price action on an hourly chart might look something like this. All right, a big move down, a further move down, a pivot from here, and again we have a break of this lower high. Okay, so this right here is our change in character. From that moment on, we pull back, we retest this area where buyers came in, and we expand to the upside. Break of structure, pull back, break of structure, pull back, and this is where we close. Okay, you can start to understand this. If you are someone that trades like this, then you will understand what I'm talking about here. You want to be trading the right side of the V. If you are thinking about biased directional plays, you want to be trading after the change of character. And from this point, you can think about, is there an imbalance here? Maybe we flip an EMA. All these signals that we're going to get into later, but just understanding what is happening within this candle here will help you create your bias. So the opposite type of candle here, all right, we have sellers very much in control. This means from the open, we pushed up, all right, we created a huge high, and from this point at the high, sellers came in. They slammed price action down. We get underneath the open, and we create a new low closing near the lows. This is signifying sellers are very, very much in control. So hopefully from this, you understand very basic principles of S and R, okay, because that's all we're doing here. This here is a level of support in a bullish candle. This is also a level of support, and this is a level of resistance, as is the high. And the opposite, right, for this candle here, resistance, resistance, support, support, okay? Always think about that way inclined. Or you could make it very simple like this, all right? This would be resistance level 1. This could be a resistance level 2, all right? And this right here is where buyers stepped in. So you'd have buyer level 1. All right, we will make this blue this time, or green, even better. All right, buyer level 1 and a support level 2 right here. Okay, and this makes sense, doesn't it? Now I've drawn this out based on what I've shown you. We found supply or resistance up here, we found bids down here, we found supply here, we found bids down here, we retested supply, and we found bids. If I do the opposite right here, all right, this is where buyers stepped in, level 1. This is where buyers stepped in, level 2. And this right here is where the sellers stepped in. On this one, I'm just going to do it as one big level to make it nice and clean and easy. All right, and that's how I think about S and R, all right, all the time. Where are buyers? Where are sellers? If you can understand where the buyers are looking to participate, all right, they're looking to participate here, they're looking to participate here, and where the sellers are looking to participate, which is right here, all right, and again, they were looking to participate for continuation right here, okay? If you can understand that and think about that, keep it front of mind, it's going to really, really help you. Before we move on to the next section, I just want to quickly go over one key point, which a lot of people fail to understand. You need to understand where the liquidity is. What do I mean by that? You need to understand, first of all, who's in control, who's trapped, and where their stops are. These are the most key principles in understanding the market, because if you can understand this key principle, when I get into the next section, which is understanding the two possible setups, it's going to make life a lot easier. So I want to come back to this bullish candle right here, okay? This candle right here. Where do you think everyone's stops are? Well, if you're a bull, all right, and you bought down here, your stops are right here underneath this pivot. If you participated as a bull and you bought a little bit later, your stops are right here. Now, if you are counter trend short and you got short up here at the top, your stops are right here. Why does this matter? It matters because of the liquidity it will provide, all right? If the following day, for example, I don't want to get too ahead on this video, but if the following day we push up through this level, okay, all the sellers who are trying to create downward pressure, they're going to stop out. When they stop out, they provide liquidity. That liquidity is buying back into the market. When you're covering a short, you are buying the market. And what will that do? It will increase buying pressure for that move up, okay? Same for the downside. If we rolled all the way over and all the buy stops are down here, once we hit this moment, you're probably going to get a flush moment. What happens after that becomes very important, and that's what we're going to go into next with the two possible setups that you should be looking for every day based on these levels. Now we've identified the higher time frame trend. We've identified the S&R levels. We've identified what the price action is doing within that higher time frame, what that lower time frame trend is, where the lower time frame buyers and sellers are participating, where is support, where is resistance, or if you prefer, where is supply, where is demand. Based on that information, we can analyze price action and look for one of two setups. The first setup is very simply a breakout setup, or a variation of that would be a breakout and retest setup. All right, these are trend continuation setups. The second setup you will be looking for is a failed breakout, or as some people might call it, a turtle soup, okay? Very, very simple, all right? You're looking for two types of setups. So what would a breakout setup look like? Remember, we just talked about the liquidity. So remember, each day you come to the market, you should be marking out the previous days, high, close, open, and low. Always mark these out and then go down to the lower time frame and mark out where the support and resistance or supply and demand is, okay? So for this example, I'm going to make it really, really simple. I'm going to do these areas here as your support areas. We'll do this as blue, and I'll do this area here as resistance. Let's do that as a pink. Okay, and we will copy these over right here. So the first thing we are looking for, especially if the trend is bullish and we have a candle like this, we are thinking about trend continuation, okay? Remember, the market has closed at the highs. We have sellers above. So if we are looking for a trend continuation, if the market has been bullish up to this point, and we think the market has the ability for trend continuation, we can look for a breakout. That might be a breakout of the high right here, which means at this point here, all right, we now have our trigger. We know that we're looking for buys. And at this point, you're then thinking about your setup. How do you get into that trade? Now, maybe you're a breakout buyer, and that's absolutely fine. If that's how you trade, then you are quite simply taking the breakout of the high or the breakout of the close, however you want to identify that. Other people might be pullback traders, which is much more how I like to trade, which means at this point here, I now know we've broken out. I'm waiting for a pullback of that key level. I'm waiting for my flow zones to support, or maybe an anchored VWAP. Something very, very simple, but I'm looking to participate in pullback. Maybe I'm looking for a trap pattern like this, and then I'm looking for continuation. Okay, I'm looking to buy a continuation play right here. This is very, very simple. This is a breakout trade or a breakout retest. This is supported by a very clear bull trend. Now, the opposite would be said if we are in a bearish trend. If the market is making lower lows and lower highs and we have a candle like this, the next day, the first thing I'm thinking about is, can we get a breakout to the downside? The opposite to this action here, okay, we'd be looking for the market to break out. Again, if you're a breakout trader, maybe you're taking that initial trade. As soon as it gets through that close or that low, you're looking to add short. Or if you're a pullback trader, maybe you're looking for something very simple like this for a trend continuation, right? Super, super simple, because this is going to be supported by this price action. Remember, once we get through this block of buys here, they become sellers. Very simple principles of support becomes resistance. And right here, this block here, this resistance becomes support. All right, so that's your first trade. It's very clear, it is a breakout trade. Looking at these same candles again, then the second trade we are looking at would be a failed breakout. All right, a failed breakout can give amazing moves in the market. So in this scenario here, remember, we are in a bullish trend. All right, this is the main trend. But, and this is why I don't like playing breakouts personally. Let's say we open right here next to the close, and the first move is a push through this high. Remember, we talked about the liquidity. It will take out all these shorts here who become buyers. All right, so let's say we then get 100,000 contracts on the buy side. All right, it flips it. Or if you're trading NQ, maybe it's just 1,000, whatever it is, it flips it and that becomes buy side. Well, that gets paired off by the market makers. All right, they needed to run the stops to provide the liquidity for them to get short, because they want to pair off that 1,000 contract buy with 1,000 contract sell, which they can sell at the market very easily, and then you get this move right here. All right, instantly rejects this area. Now, I am not looking to short the top of the range up here, okay? It's not what I'm looking to do. As always, I'm waiting for a failure pattern. So that pattern can be very simple: a retest, and a rejection, and then a continuation. Alternatively, it could be something a little bit more trap based. Maybe it's something that looks a bit more like this. Maybe we push back, all right, we do one more push and then we do the lower pivot, something like this. Again, very simply, maybe you are supporting this, all right, with a break of the EMA. Maybe it's a 21 EMA, maybe you using my flow zones, maybe it's an anchored VWAP, maybe it's very basic trend line. It could be absolutely anything. Remember, we're looking at key areas and then we're looking for a reason to get in. But the previous day levels are higher time frame areas. It's where lots of people will have stops. It's where a good play will happen, either a continuation or a failed breakout, time and time again. And in a moment, I'm going to show you in the charts. Let's look at the same principle of a failed breakout on a bearish candle. So remember, this time we're expecting the market to move lower. All right, it takes out all the stops and it turns back inside. So for me personally, I'm then looking for a pullback or some kind of signal like this to be thinking about getting long. All right, that's the next thing I'm thinking about. If we fail the breakout, I'm not looking to keep short and trying to force it down. I'm thinking about a long on a bullish pattern on that lower time frame. Might be an H1, H4, M15, M5. It doesn't matter. And from that point on, I need to think about targets. That's something we also need to talk about. We need to think about targets. And what's key in this is to think about what we talked about earlier in the video. What is the next level of support or resistance? Maybe it's something in the mid of that candle. When we looked at that H1 structure, for example, the trends don't just move all the way upside, all right? We have levels of support and resistance, and we need to respect those when we take trades like these. So I'm going to go through a market replay here, all right? Very simple. Now, the market is in a bit of a funny range at the moment. Clearly here, we were in a very nice downtrend, okay? And we've actually had a significant pullback, which has potentially taken out this pivot high, although for me, we have a very clear level of supply right here in a block, which we keep rejecting. Now, beyond that, if I look at the whole range as a fib, we are in the golden zone and rejecting, all right? So for me, I am potentially thinking about a further dig down lower to rebalance some of these candles, and I can then use things like anchored VWAPs and so forth, so we can put one of those on from this low, and we can expect this, and this also coincides with a 20-day moving average, an SMA. So lots of reasons why I was thinking potentially we could do a dig further down. Potential. We are potentially also making a flag right here, so a short-term downtrend right here, which would be a bullish signal. All right, so all of these things I'm thinking about when I'm coming to the market. But the first thing I need to do very simply is mark out the key levels of the previous day. So let's go ahead and do that right now. Now I've got these levels quite clearly marked out on the daily. What am I going to do? I'm going to go down to a lower time frame. So for me, that is an H1. And I'm looking at this now to see how did price act? Now, if I was going to draw this out very simply, all right, this is what price did on this day, okay? This is what we did, all right? And then we closed right here. So you can see we have some tapering down here, but very clearly we are in a downtrend. So I want to think about what price did at these levels. So definitely this was a clear block here. We have an imbalance here. We definitely have some form of supply right here in these levels, right? These are just intraday levels. And now we can go down even further and maybe tighten some of these up. So I want to see how price is acting. So we have a low wick here, which I'm going to have a quick look at. So this level right here becomes key. So if we break out of this level here, we can think about a possible rotation higher at this point on the next trading session. All right, so let's just zoom through and see how price acts. Now we sweep the low here, create a new low. This is all overnight, but you can see how it took the liquidity. This is what we talked about. So this right here is already a failed breakout, all right? It happened in the Asia session, but we failed to break lower and we came inside and we've already filled this gap. So what am I now looking at? How high can we grind up, all right? But now the trend is definitely trying to take out this pivot right here, all right? Which we successfully do. Now we're not quite into the New York session yet. Keep coming through. Let's get to New York Open, which is right here. Okay, here is the New York Open. So you can already see in this day, what have we done? We swept the previous day low, failed breakout of the previous day low, and we instantly push up. Where's the next target liquidity? It is the previous day high, isn't it? These levels up here, this here, and the final resistance, which would be all the way up here. So we can do a block there. All right, so now we're looking at that. We are not participating as a buyer in this New York session up here at 9:30 because this is quite clearly a level of supply. So two setups, very simple, two setups. The first, breakout, retest, expansion higher, or a failed breakout, something like this, all right? Two setups is all you're thinking about when we're opening and coming into areas like this. So very clear reaction straight away off there. Further reaction to the downside. Now we need to see, do we get a further stuff point? Right up to the previous day high, still holding trend. No reason yet, even on a 15-minute chart, for me to start thinking about getting short. But now we have 3 candles up here starting to think about a short. All right, so if I go down to a lower time frame now, we do have an imbalance in here. We can start thinking about, will price roll over? No reason to be early. All right, we can wait now for a quite clear break of structure of this. That will be a nice signal for a potential rollover. We do not need to guess. It might want to grind higher. Still holding range. Now this is starting to look very bearish now. Think about how many buyers are trying to force price back to the upside. For us and our signal, has it broken out? It has not broken out. It has not broken out and retested. There is still no buy signal. This is where you need to be patient in the market. Until it breaks out, we do not think about that. Now we're getting that move under, all right? And this is starting to look like a very, very good short now. And there you go. Straight down to what? Old resistance, which might become support. So now we need to see, do we get a reaction here? Remember, we broke through this, which means currently this is potential support. Okay, very, very simple. Flush through that level. Where can we now attack? Where we broke out from, these old levels of demand. All right, so we can pull this across and pull this down a bit, probably something like this. Chop around in this previous day close, old resistance becomes support, now becomes resistance again because we rejected it. See how it's retesting over and over. This is a creation of a new bear flag right here. So continuation lower would take us all the way back down to the demand block, but it's holding on for now, as it will do sometimes. And now we're trading back overnight. Okay, so we can do the same thing in a new session. So you'll see here how this offered a fantastic short once we failed to break out, all right? Once we came back under the previous day open, it offered that retest, it offered the breaker structure, and it offered a great short all the way down to that first level of support. We broke previous day close and we start chopping, and then it doesn't really give another trigger, all right? We lose momentum and we lose time more than anything coming into a new day. Coming into the new day, then we do the same thing all over again. So now our levels have moved. All right. So we have a new previous day high, a new previous day close, a new previous day open, a new previous day low. So we are opening right here. So very simple. What are we thinking about? So the same rules apply coming to the market. If we sustain a bid above the previous day close, potentially we can come up to this previous day high. If we start failing the previous day close, potentially we come and retest the demand block down here in the previous day open. So again, we're going to do the same thing. We're going to go down to a lower time frame chart. In this case, I'm going to go down to an hourly chart and just see what is what. So we had bid support down here. All right, so this area is possible bid support. We have an old gap that we can mark out in here. And we have this block right here, okay? Now, this block becomes of great interest to me because it is supply. And if we get through that level, all right, for potential head and shoulders, we might reprice this whole price action on this H1 chart. So I'm also interested in, if we squeeze through here, hold it, maybe this is a TP1, all right? Maybe we don't come all the way up to previous day high. You have to think about that. And then we're going to look at this supply block right here. All right, and then let's move this forward towards the New York Open. So coming across, you can already see coming into the New York Open, we have already taken out that supply block. So by the time I get to my screen, what do I see? Well, the lower time frame trend is doing what? We are in a move to the upside. All right, lots of liquidity built here, which means you have to be very careful. Now this block here is now quite clearly become support, so I can actually get rid of that now and think about more immediate structure coming into this open. So I want to come up right up to the open. Let's move this across. All right, so this is the exact New York Open. Now, notice we are opening near this old flag range, all right? We have bid support all day to the upside, all right? We have a previous day high all the way up here that we're looking at. We are above previous day close. We're above previous day open. We're above the previous day low. This is bullish price action, but can we run up to the upside? Who knows? Who knows what we can do? The rules just apply, don't they? If we are going to hold above previous day close, then we have the potential to move upside. That is the only thing in play right now, other than a failed breakout of the previous day high. That's all we have in play. So let's just wait and see. We have no trade option right now until we come right down here. All right, this is our first trade option. Why? Because overnight we created lots of demand down here. All right, so if we are going to hold bid support here, then we can think about joining trend to the upside, but we do not want to be early. We will need to see price action shift and show us, but for now it is simply rolling over. All right, so now we're through previous day close. Very, very key level. What will we do now? Here is our upside move. Now, instantly, I am now thinking about a possible potential reversal because we've taken the liquidity we talked about. If we can pull back into a range here, we can think about that inverted head and shoulders, something very simple like that. All right, I can take this imbalance. Maybe it will start digging deeper, for example, and see if we can get that upside move. All the time it's holding that demand. There we have a very clear break of structure. All right, we can create a flag simply like this. Here is continuation. So what is our target? Simply put, we have left liquidity at these highs, haven't we? One block here, one block here, all right? And then potentially for a run up to the previous day high. So we're just going to hold on to this trade and see if we can keep expanding like that. Now I need to take a partial here, as simple as that. We've done an explosive move up and now I'm just holding a runner. Either it will move up to that previous high from the previous day or it will not, all right? And if it puts in a new pivot, it's going to allow me to move this stop up. So maybe I can be a bit more aggressive into this old range here because that's a large range. And then we go, we finish and we've made money. Hopefully this video has helped you a lot. Remember, the market will always do one of three things. It will be in a bull trend, a bear trend, or consolidation. And the best moves will always happen when we break out of liquidity and sustain price action in trend, or when we fail to break out and we come back inside. All right, just a little recap over and over again. When we fail to break out of an area, when we're in a very clear dominant trend, that is when you get a potential reversal. When we have very clear breakouts of clear levels, that is when you get continuation, and you can see these on multiple time frames. Price is fractal. Everything I've taught you in this video based on the daily chart will happen on every single time frame if you understand very basic but key principles of S&R. Take what I've taught you today and start including it in how you trade. Don't lose everything you've already done. If you're an EMA trader, maybe you use an EMA cross, keep using that, but notify and identify these key price levels on daily levels. If you are trading with anchored VWAPs, the same rules apply. If you are trading ICT or SMC, use what I've taught you today and start incorporating it. Those daily levels matter. Breakouts and failed breakouts are what make the market move. Just remember that. Until next time, use hard stops.